From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon, welcome to the COB, the first edition for this trading week. My name's Kyle Rodder with Danny Akuye. Danny, great to see you on a Monday, no less.
I know, a Monday.
As you can tell, it's super busy. That's why we have Danny on board. And let's see how the market has absorbed all of that today. The CBO 200 lower for the session and finished down by 0.33%.
Yeah, and it looks like the ASX 200 off almost 25 points, also around 0.35%. So 7,123 on the ASX 200.
There you go. Let's jump across some of the sectors now. Miners to start with, just because, well, actually we're higher generally overall for the session, although that may have flipped as the day unfolded. But some interesting news out of China. We'll get to that in just a moment's time. But a bit of a mixed bag there that you can see on some of those mining names. The materials and energy complex, like I said, were up for the day. But the retailers, a fascinating one because the consumer staples sector was largely higher, I think.
No, consumer staples
discretionary was up.
Yeah, and it's really amazing because we don't have it up there, but Adairs was carted out backwards.
I think we have Adairs next actually on the page. If we flip over the page, I think we have Adairs there. No, we don't.
No, whereas Lavisa and Premier, Premier obviously had great results and also they're talking about restructuring. Lavisa for some reason went off to the races, which, I have no reason, don't know why.
Rhyme, isn't it?
Yeah, but it's really odd, isn't it? The retailers, maybe everybody's saying it's not as bad as we thought.
Yeah, maybe so. And that I did have a great chat today with Raymond Chan, who I think will be in the newsletter today in terms of that interview, saying that perhaps the bar was set a little too low for consumer discretionary, and it has been exceeded so far. JB Hi-Fi was one name that he highlighted. But let's get to healthcare because that was another area of focus today for the market. CSL pulling back off the lows prior to its results, but certainly at the bottom of its range. The pain for Sonic Healthcare shareholders continues off by 1.3%, but Cochlear after last week's good results.
It looks like the momentum investors are getting stuck into that one because that's really been a top performer.
Yeah, definitely. Back on the winners list, I guess. It was sort of beaten up there for a little while, or at least a little unloved, considering, well, used to have that market darling status. Maybe it's sort of regained that, I'm not so sure.
Absolutely, yeah. And Pro Medicus as well continues to do well. That must be heading back up to all-time highs, isn't it?
Yeah, you always look on those valuation measures. I think most brokers have them on their platforms, and it's always up the top there. It's just one that is way overvalued, of course, but just the momentum is so strong. But otherwise, a little bit mixed, perhaps a little weak overall for the healthcare sector today. Let's get to our three themes because obviously, as we spoke about last week, we've been sort of crisscrossing a little bit in terms of what's actually driving these markets right now. Grinding it out, well, that's just the story of the day. It was actually a fairly choppy session and ended up just moving lower in the last hour of trade. Uppers and downers though. That's just, what you get in earnings season, don't you? There's been a few uppers, there's been a few downers.
So Ordinate, for example, off to the races. I think Elders was one of the ones that was taken off to the woodshed and chopped up as well today because, that's off 10%.
What was that? Because that didn't report, did it?
Oh, yes, they did.
Oh,
I thought
my
they
apologies.
did.
No, I could be wrong.
No, they gave out profit guidance. So obviously they've downgraded. It's amazing though, isn't it? The season is just moving so, there's so much volatility.
Yeah, actually it was fascinating because I know last week we were talking a lot about whether this has been a good earnings season or a bad earnings season. Dr. Shane Oliver provided this really interesting chart that more companies have beaten on average more companies this earnings season have beaten on average, but more companies have also missed estimates than average. So the whole sort of takeaway is that people are having a really hard time establishing sort of estimates for this environment. So just the confusion, I guess.
And also probably a lot of companies are not going to give guidance. And those that do give guidance and good guidance get massively upgraded. It's not easy at all at the moment. I mean, you can think you know your stocks, but a few train crashes followed by a few rocket emojis.
It keeps things interesting, that's for sure. And also keeping things interesting, the PBOC today, just in some of the broader macro and regional news, cut interest rates, but left one key interest rate unchanged. That one is specifically sensitive, or I should say the mortgage market is particularly sensitive to that 5-year loan prime rate, and cut the 1-year loan prime rate by less than expected. So just an interesting turn of events there, because most economists had been tipping a 15 basis point cut to both of those rates. So something we'll watch throughout perhaps the rest of the day as Asian trade wraps up, and obviously US and European markets try to interpret what's going on in China. But let's get through the results now, because there was a few, Danny.
Lots of results. And Ampol, has posted an 88% drop in first half net profit, hurt by weak refining margins at its Lytton refinery in Brisbane and weaker pricing of its products. But interestingly enough, the market like that. But BlueScope net profit after tax fell to $1.01 billion in full year 23, down from $1.8 billion a year earlier. I think the market liked that one. And NIB came out with some good results there. So net profit up 45% to $197 million, revenue up 14%, final dividend 15 cents per share, and underlying profit up 11% to $263 million. And yes, I spoke to the CEO today, so you can catch that online. They've been picking up market share. Obviously, they probably have gained market share from that hack at Medibank.
Yeah, interesting, fascinating. Reliance Worldwide also reported it was one that we talked about companies that were carted out. The results on the sort of a top line kind of the financial results themselves weren't actually that bad, but flagged just some difficulties ahead. Clearly, has had a pretty robust couple of years. Suggests that maybe the macro backdrop won't be as favourable for them. So it was off by 8% throughout the day's trade. We'll flip over the page there. So there you go. See FY24 total demand lower. Said sentiment is potentially going to work towards against it, I should say, over the next 12 months. Speaking of insurers, though, AIG Australia, I should say, another in focus,
pretty much trading sideways, and net profits up to $132 million, revenue $19.85 billion, 9-cent dividend, and gross premiums up 10.6%. I did pick up that they're talking about raising those premiums again, so I think we can all groan inwardly at having insurance costs continue to go up, the same of which can't be said for private health insurance premiums for NIB, which really are quite modest at the moment, well below inflation, around 2 to 2.7%.
Interesting. Dynamics there in the insurance space. Audinate was one of the good news stories of the day, and I had a chat with the CEO myself, Aidan Williams there, discussing the result. First profit posted since 2019, and really starting to see, the business described it as clear air when it comes to, the COVID-related disruptions, not obviously just to the demand for what the business does, but just some of the supply disruptions, especially when it comes to microchips, and how they've built greater resilience in supply chains now. So the stock was up about 10%.
Surely there must be a beneficiary of this YOLO Taylor Swift go out and watch concerts around the globe, I would have thought.
Maybe. Live music. Well, I mean,
live music.
I like live music. Music was my original passion, remains to be my passion, and the way musicians actually make money nowadays is from touring. Because
they have to, because there's nothing thanks to Spotify and
and even before that it was just streaming. You can basically steal music for nothing if you really want to. Musicians have to get around, and even the small scale musicians to make a living have to get out on stage. So it might be a bit of a trend there for Audinate. But again, the company fairly happy with its position now after a few difficult years. Oh dear. On the other side of the equation, though, this one was the stinker.
Yes, which was well flagged. I have to take
Not
my
well enough, it has to be said.
hat off to Henry Jennings on Friday, who talked about he'd had a massive divorce with this company, and it is down 35% today. So a half-year net loss of almost $140 million, revenue up 2.3% to $315, underlying EBITDA down 17% to $59.5, and suspending interim dividends. Never never a good sign when the dividend is suspended. Cash flow problems.
Yeah, a long road ahead.
That is so grim.
Yeah, reading through the results today, they obviously were talking up a lot this sort of transformation, but it seemed like it was a long road ahead. So we'll see how that goes over the next few days. I'm sure we'll start to see the broker downgrades coming through, and maybe the worst is not yet finished for Iress there. Let's talk now the stock of the day. And, well, you were in the driver's seat, I think.
Indeed, it was oMedia. And not only did we have a chat later on with Catherine O'Connor, who's the CEO of oMedia, but I had Daniel Ortizi and David Lane discussing what they thought of the stock today.
Today's update probably warrants a hold. If you have that top line momentum, that is positive. But there are still a few risks in the near term, especially around those contract renewals. So definitely want to be watching it closely. But I think for now, you can definitely hold it.
We've got a hold recommendation on it, and that's really because they're now trading pretty much about where our fair value is. Got a fair valuation of $1.50 on them. The share price has responded very nicely today. It's up about 7%, so trading at $1.46. So trading pretty much in line with where we think that they should be trading. But having said that, it was a good result, and it shows that the out-of-home advertising or particularly on the roadside billboards and the airports have done very, very well. And that's part of the advertising industry that's doing a lot better than most other.
So it's
holds, happy holds
hold.
For both of the experts, yes. But that side of the media business, out of home, is doing very well, and they've been capturing market share there.
Yeah, I did notice in the results there. It's sort of fascinating just where the strongest drivers of growth were. It just
City
provides
of Sydney.
Provides such great explanation of just
Lara.
people's behaviour at the moment. You know what I mean? You can just sort of infer so much from just their results, but. Let's get to our guest for the COB today. Martin Somasundaram from Deep Data Analytics joins us now. Martin, thank you so much for joining us. I wanted to ask you a question on just effectively how you see earnings season so far now that we're getting closer to that kind of halfway point. There seems to be some big hits, there seems to be some big misses. Confusion perhaps or uncertainty remains perhaps the common theme. So how have you seen the reporting period so far?
Yeah, I think the word is volatile. You've got some sectors that were pretty much priced in. I mean, when we had the bear market start off last year, some sectors were priced in for recession, like retail, property underperformed. So there's a fair amount of pessimism priced into that. There was a lot of optimism priced into other sectors, especially in the larger caps. So you've got these two different worlds going into reporting season, and obviously, we've had a decent rally off the lows in 2023 and mainly driven by tech and growth stocks. So that's unwinding quite quickly in August. You can see it in Apple, and Apple's the biggest stock in the biggest sector in the biggest market. And when that baby comes down, everyone comes down. So when that's happening, you got a lot of volatility coming into the market, and we've had really low volatility for a number of months. The market has been pretty resilient on negative macro. So it's a reporting season. You've got macro turning, you've got China worries. So the market is really sensitive. So it's not forgiving. Everything, you come out with something slightly negative, you're down 10%, and then either you recover or you keep falling. So it's like the base case scenario is down 10%.
Absolutely. It's a bit like avoiding those landmines this season. But hey, look at the retailers today. Premier Investments, market obviously like their result, but they're also restructuring. What do you think Solly Lou's up to there?
Yeah, Solly is a smart player. You don't want to bet against him. It's actually come back a bit. And so it looks, it's always trades at a premium multiple, so you never say it's cheap. But on a relative basis, it was looking a bit cheap. The divestment, CEO leaving, there's a lot of, moving parts to this update. Look, my daughter works at Smiggles. They're killing it. So I don't see, they're being affected right now. But I guess the medium to longer term view with what's happening in consumer spending, it's going to hit even the big guys and the best guys. So I think Premier Investment is looking at its options, but I'd be a bit careful assuming that divestment is going to play out. This is not the first group to come out and talk about divestment. It's one thing to talk about it, it's another thing to actually do it. It does make share price go up because everyone suddenly realizes value could be coming out. So in that context, divestment is a great pitch for a market that's looking for ideas. I don't know if Solly would go. I mean, Solly's got a history of grabbing more things, not letting go of things. So I'll wait and see how he plays out. But look, he's a smart operator, and the stock was on a relative basis pulled back. Retail sector has been hammered, so a bounce was inevitable. And it's a high quality business, diversified business. So you can hold it for a couple of years and it's going to be around.
Could speak about another half a dozen stocks that reported today, but wouldn't mind looking ahead to tomorrow because we do have BHP. Anything that we should be looking out for in particular, because clearly it's going to drive much of what the market does tomorrow.
Yeah, well, it's 10% of the index. It has a way of manipulating the market. I don't think there'll be too many shocks. I think most people, I mean, their quarterlies for miners have been already out. Yeah, you generally know that. So surprises out of mining reporting stocks is going to be very little. But I guess it's going to probably lean towards what their guidance to China is and what they're seeing in China. I mean, we've had, there's always a story every month about how stimulus is coming out of China, which hasn't played out. And today's rate cuts were less than what the market expected. I'm a bit both sides on this because at the end of the day, what can China do? They are trying to, I suppose, keep the consumer spending, but at the same time, the rebuild infrastructure stuff that they were doing in emerging markets is hard to do because they're carrying way too much debt in this kind of environment. And then on the other side, I guess they can't keep jamming up manufacturing because the global demand for manufactured goods is quite weak. So there's not much they can do at this point in the cycle. I think they just have to manage it till things get better. And I think China's doing okay. Interesting that BHP recently has been talking a lot about India rather than China. So that tells me things are going to take a bit longer than what it is. But I don't see BHP shocking the market tomorrow.
Yeah, a bit hard to shock when they have kept us very up to date with all the quarterlies and things. Nathan, thank you so much for joining the COB on ausbiz this afternoon.
Not a problem.
Nathan Somasundaram there from Deep Data Analytics. But let's get to the leaders and laggards, shall we? And like we flagged, there is some big movers. Premier Investments, just talking about that, so up 12.8% for the session. And Ordinate, we've also covered off as well, up 10%. Breville, oMedia, Nib Holdings, actually we've managed to do pretty well there.
Absolutely, and Breville obviously holding up, and I haven't had a look at the results, but clearly the market taking heart.
Indeed, shine bright like a diamond. Let's look at the laggards now. And Iress, we're never going to exceed that kind of a drop, losing a third of investors' value there in the space of the session.
That is so brutal, isn't it? And poor old Elders, that just continues to disappoint, doesn't it?
Yeah, in fact, we probably could have asked Nathan about that because he is fairly constructive in the long term on Elders, but again, it hasn't really turned the corner yet. Reliance, another one, flagging a difficult period ahead. Megaport and Appen also.
Appen's yet to report, isn't it?
Yeah, Appen's just reporting next week. I don't know.
Right.
Maybe we're off AI again for some reason. I'm not too sure.
Yeah.
Small cap leaders and laggards as well. There's going to be a few big names on there. Smart parking, big one. UXO. Sometimes investors are pretty focused on that or interested. Up 9%. Laggards, however, let's have a look at that.
Adairs, yeah, they've also cancelled their dividend. They've got some cash flow problems, so investors would be concerned about that. And looks like Freelancer off 14%
as well. Yes, indeed. Okay, let's look at what we have to look forward to now. Brick Summit tomorrow.
That's this week, isn't it? This weekend.
I think it kicks off tomorrow based on my calendar.
Okay.
So I could be wrong, but it was just
so if anybody that doesn't know about this, the BRICS are meeting over in South Africa. They're talking about launching a gold-backed alternative currency to the US dollar. Putin will not be attending. He will attend via Zoom or something because otherwise the South Africans would have to arrest him.
Yeah, I know. Wasn't that a dilemma? Anyway, that could be interesting to watch again, maybe for if you're interested in big, long-term monetary nerd. But back on results, and that's what we'll be focused on. BHP, we spoke about that. But Coles, Pilbara, Woodside, probably the big four tomorrow, but there is about 20 stocks reporting. And I think you said, obviously because of BHP for the most part,
it's about 20% of the index because they're about 11%, exactly.
Yeah. And XDiv, well, you can see that on your screen.
Computer, Dicker Data, Computer Share, Dicker Data, IPH, and NetWealth.
There we go.
Got to remember those ticker codes.
Yeah, I know. It keeps you on your toes, right? Memory test. But anyway, it has been a massive day, and it's going to be a massive week. You can catch up on everything that we ran through today on your website. And but Danny, what do you reckon? We wrap it up here?
Absolutely. That's it for Monday. We'll see you tomorrow.